Oh, Bitcoin. Got to talk about Bitcoin. I said Bitcoin might could go to 50 to 100,000, but it is going to go down 95% before it ever booms again.
Hey guys, welcome back to Library of Wealth. Today we have Harry Dent on the future of Bitcoin and the economy. Dent believes that banks will soon write down mortgages because they've been issuing unsustainable mortgage loans to their clients. He says that because this inflation has been artificially created through stimulus over the past 13 years, he's confident that it will be brought down through recession and won't make a comeback as long as no new money is printed. Dent predicts Bitcoin will decrease to the 2018 low of $32.50, but the more it moves, the less downturn will be generated. Let's listen to this interview with Harry Dent as he gives his take on Bitcoin and its role in the financial market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
Ever since the 2008 financial crisis and early 2009, I mean, the economy this was the worst downturn we've seen since the Great Depression, and at least relatively on par with 80 to 82. I mean, so this was a shock. We got spoiled. And so governments reacted, and what they did was they just said, well, they just printed money. The US government printed $1 trillion right there in 2009, that first year. And you know what? I would have said yes to that. We're in a deep downturn. Yes, you want things to restructure. You want business to get more efficient. You want to knock out zombie companies and unproductive debts. That's a very fruitful thing that economists don't really recognize, okay? They don't like recessions. But you don't want recessions to get crazy and get out of control because they can build themselves. So that first trillion, yes. When the bubble started, the first tech bubble, 95 to 2000, okay? Bubbles are always a sign of speculative and unproductive investment and, that sort of stuff, okay? That's when money velocity started to drop like a rock. It is still dropping into 2022. That is the telltale indicator. And bubbles always see this, and bubbles always have the biggest crashes because the investment is so unproductive and because bubbles encourage people to just invest wildly and financial assets go crazy, okay? And that's what we've seen. When they started printing money like crazy in early 2009, people, oh my God, they're gonna create inflation. No, we've only seen inflation recently. I'll get to that in a minute. What we saw was financial asset inflation. Financial assets today, I've just been researching this in depth and updating everything, close to $600 trillion. That's the biggest economic number in the world. And if you compare that to global GDP at 94 trillion in 2021, that is 6.4 times GDP. No, does that mean anything? No, not unless you look at history. Historically, 2 times GDP is normal for that. And 3 is as high as it's gotten generally before this. So this is saying we're way out of that. This indicator, money velocity, is telling us it's dropping like a rock, that we're investing money unproductively, and that's going to eventually cause worse and worse investments, harder and harder to pay back the debts you borrow, and that's what causes a major downturn like the 1930s. We have not seen a downturn. Even in the 70s, that was a generational slowdown in spending, okay? And it was inflation, which is bad for markets, but it wasn't the Great Depression. Stocks went down 89%, the Dow, which would be more like the NASDAQ today, 89% in that Great Depression crash, okay? Way more than we've seen, even at the worst so far.
Dent believes that Bitcoin will not bottom this year because of the size of its bubble. He's extremely bullish on everything to do with digital currencies, but it needs to reach maturity by crashing down to an affordable price. He says that gold will decrease, but will do better than any other commodity. Both Bitcoin and gold will probably crash before anything in the stock market does.
The biggest downside, we'll see, real estate never goes down as much as stocks, but real estate is financed by mortgages, and therefore that leverages it. And real estate is more dear to our hearts. And almost everybody owns real estate, and not everybody owns a lot of stocks. So this real estate bubble is going to be the hardest thing to hit. Australia, out of the whole thing. The United States is going to be whacked all around because we're so heavy in stocks, and stocks is such a big business here. But that's it. This is, and I've been saying this is not new stuff because of COVID. COVID has nothing to do with this. It just was a distraction, and it got the government to print $10 trillion in 2 years. This is going to go as the stupidest thing. You're going to print $10 trillion to fight a short-term virus. It just makes people a little sick and then goes away. The same thing happened in early 1920s, influenza. It hit for a couple years and went away. We have a track record for this too. This was the stupidest thing, but why did central banks do this? Because they've been pumping up the economy nonstop since early 2009. They know how fragile it is, because why would they have to keep stimulating that much, that long, if the economy wasn't dead? They're reviving a corpse. So they know how weak it is. So they got scared and they really went overboard with COVID, and that was their classic mistake. This is the time to worry about the downside. This is not a correction. It's not a drill. Get out of risk assets now. Any real estate you can sell, sell. Certainly if you have a vacation home you don't use that much, okay? Stocks for sure. The more you get out of risk assets, the more you get into liquid. Oh, and where do you put your money? What? And then look at the research. Look at the early 30s. Look at 2008 to 9 crisis, and that's the best comp for this. What was the one asset that went up? High quality U.S. Treasury bonds, and yes, Aussie 30-year, 10, 20, 30-year government bonds as well. I would take the treasuries because the dollar is going to get the biggest boost. The dollar was the safe haven in the last crisis in the late 2008. Oh, Bitcoin. Got to talk about Bitcoin. I said Bitcoin might could go to 50 to 100,000, but it is going to go down 95% before it ever booms again. And my projections, just going back to the last set of lows after many years of an extraordinary boom, just going back to the late 2020 lows, it's going to be down 95% to 3,200. Now, might be a little less than that. Whatever. So Bitcoin is going to crash. People are saying Bitcoin is a safe haven. Bitcoin was the biggest bubble. The dot-com stocks and stocks like Amazon were the biggest bubbles in the first tech bubbles and crashed the most. Also 95% Amazon. So that's what we're looking at. Bigger the bubble, the bigger the bust. This is an everything bubble for the first time in history. Before, the first stock bubble was 2000, but real estate didn't bubble until 2006, and real estate bubbled because people got killed in stocks and started speculating in real estate. Everything. Most countries in the developed world, stocks, real estate, bonds, everything are peaking at the same time here. We've seen, just to summarize and end here, what I call the first crash. First crash is important. If it's only 10 or 20%, that's not the first crash off of a bubble. History says 28% minimum, 50% maximum. Well, the NASDAQ went down 35% in this first crash. So I say this bubble is burst. There's very low chance we make a new high in the US, and if we don't there, it's only worse in most other countries.
Dent states that gold is no longer a protection against inflation. There has been a massive deflation in the entirety of the gold asset bubble, and gold's value will continue to fall dramatically. He believes that treasuries are the newest hedge against inflation, with AAA corporates as second best. Dent says the smartest thing to hold on to is treasury bonds, but the simplest is ZRAs. He feels that we're coming towards a global digital currency system, with Bitcoin as the standard, which will continue to expand with the economy. The US dollar will begin to go sideways and lose its position as the reserve currency, but will continue in correlation to Bitcoin. What do you guys think of Harry Dent's opinion on Bitcoin as the new global standard? Let us know in the comments. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.